Welcome back to the Evan Phillips Show, guys. Today we're talking about two different things. We're talking about lines of credit and we are discussing lines of credit and equity. Now, there's a lot to discover and talk about on both of these topics, so I'll try to get as much as I can in here quickly. So first, let's talk about what is a line of credit. So a line of credit is something that you can draw from and reuse it. So for example, let's use a credit card just for this example. So imagine that you have a $100 credit card limit and you spend $50. Now, with a credit card, since it's a line of credit, once you make your payment, that line of credit becomes available to you again. So if you have $100 available limit to spend and you spend that $50, then you pay that $50 back when your bill is due, you're going to have $100 available to use again. So it's a revolving line of credit. You can use it, pay it off, and reuse it. So this is one of the basic methods that lenders use in order to lend to people. So if you use something like a home equity line of credit, it's very similar, and we'll get into that topic. So with a line of credit, these are great because you can actually use them on things that you may need to purchase. For example, if you have a Costco membership and you shop every week and you spend, let's say, $200. Once you spend that $200 and you receive your statement in the mail, it's going to tell you you've got a $200 balance, it's due on this date. Once you make that $200 payment towards your credit card, then that $200 is available for you to use again in the future. So this is a great way to give you access to funds that you're going to use and then repay. So I'm a big believer in repaying your credit cards. I know it's not a common thing for a lot of people, but it should be. It's going to really help you guys avoid interest, and it's going to allow you to have access to those funds if you need them, and it helps to protect you when you're making your transactions. So that line of credit is revolving, means that it's always going to be available. As long as you make that payment, you're going to be able to reuse those funds. Now, when we talk about a home equity line of credit, we're still using the line of credit method. So it's still the same concept. And I hope that credit card concept really helps to explain further what I'll go into next. So the other topic I said we were discussing today is equity. So let's talk about equity. What is equity? So equity is the amount of money that you own in something. For example, let's say that you own a home and it's worth, let's say, $100,000 and you owe $50,000. Well, you would have $50,000 in equity. So think about this. If you owe $50,000 on that $100,000 property, in a perfect world, we're just going to say you sell it, and you're going to walk away with about $50,000 because that's the amount of equity you have. So that's a very basic way to explain it. Obviously, there are other costs involved, but for the simplicity of this video, we're going to use this kind of conversation. So, in a home equity line of credit, you're going to be able to take, most lenders will give you up to 90% loan to value. So that means you can take up to 90% of the loan to value of your property. So I don't really know any lenders that really give you up to like 100% out there. I'm pretty sure there's some that may, but the standard is around 80 to 90% loan to value. Veterans can take up to 90, and I know some other standardized loans can take up to 80. So, and I know all of this can be confusing, but I'll do my best to explain how this could help you. So if you're a homeowner now and your home is worth, let's say, $100,000 and you have a balance of $50,000, well, hey, you might be able to take some of that equity and do some things with it, like pay down your student loans or consolidate some of those credit card bills that you have not paid off, or help to fund another property. Another great thing to do with a home equity line of credit would be to put money back into your asset. This would allow you to increase the equity thus further. In addition to that, some people even take those funds and they may also pay off their mortgage. So this might be a little tricky to understand, but let's say that you owe 50,000 on your home, you've got 50,000 in equity, and you take 50,000 out of that line of credit and you pay off your mortgage. Now, if you do that, I mean, the only benefit of that would really be if you get a lower rate. But those are just some things you can do. Outside of that, you can, fund a student loan for your children instead of putting them in the student loans, or you could purchase a vehicle. You can do a lot of other things, whatever you want really with cash that you can accomplish. So home equity lines of credit are great ways to help you have access to those funds, pay things off, and pay it off within a time frame. Now, a home equity line of credit is going to have a 10-year draw period in most cases. So a draw period is the amount of time that you can use those funds to pay for things. So you can draw from that line of credit for 10 years and use it to do things. During that time, you're only making interest payments, so it's interest payments only. That does not mean that you can't make principal payments, because you can. That's a lot to get into, and if you guys have questions and you're interested about that sort of thing, I can go into more depth about it. But once again, for the simplicity of this video, we're going to try to just keep it as simple as possible. So that's a home equity line of credit, and how the equity would work with allowing you to reuse it and pay things off. So in that scenario, the last thing I'll say is just to kind of give you guys an understanding of how that would work is, let's say that you owe, once again, $100,000 or $50,000 on your home, and it's worth 100, and you spent maybe $20,000 paying off your credit cards. Once you pay that $20,000 back to your line of credit, guess what? You can reuse that money again to do other things. So once that 10-year draw period is over, though, you're going to start your repayment period, which is 20 years. And that's when you start to pay back the loan. Some people will refinance it to give them more time to draw funds from the loan, and all these other things. Now, another thing I want to discuss here is an installment loan. So there's a home equity line of credit, and then there's a home equity installment loan. What's the difference? So with a home equity installment loan, the concept is the same, where you're going to be able to take a percentage of equity out of your home, whether it's 80 or 90%, just depends on your lender and the program that you're in. So let's say in this scenario, you're taking, same scenario, you've got a home, it's worth $100,000, and you owe $50,000 on it, and you take $50,000 out in equity. And this is a little different. So on an installment loan, you're not going to have a revolving line. So like we talked about on the line of credit, where you could take money from that line of credit, use it, pay it off, and have access to it again like a credit card. This would be more like an installment loan. So an installment loan has a set fixed number of payments. So typically you'll get a payment book, and it'll tell you when your payment is due, how much it is, the date, all of those sort of things are going to be on this book all the way to the end. You'll know from start to end how much you're going to pay, interest each month, everything is there. So on an installment loan, you're not going to have access to reusing those funds. So if you make a $200 payment or a $2,000 payment, you're just going to be paying off that loan sooner. You're not going to have access to a revolving line of credit where you can pay $2,000 off and then have it to use again towards other things. Now, one of the benefits of using an installment loan is you understand exactly what your payments are going to be. Since an installment loan, you're going to have a fixed interest rate as opposed to a home equity line of credit. In most cases, it's going to be a variable rate. Some lenders do provide lock-in features, which means you can lock in a specific rate on the line of credit, but it's typically a little bit higher. So those are just some details I don't want to leave out. So I think they're both great products for people who are looking to maybe pay off some debt, maybe pay off a mortgage or purchase another property, or whatever it is you need financially. I would say the line of credit is, I prefer it just because it allows you to have access to those funds again. And for example, let's say that you took out $50,000 and you don't touch it. Well, guess what? You don't owe anything on that line of credit. It's just like a credit card. If you had a $50,000 credit card sitting there, you're not going to pay any money on that credit card unless you use it. So I like that feature. And I do like the fact that in most cases you should be able to lock in an interest rate. But for those people who may want to pay things off and they have a really strict income with, there's no variableness within the income, then I would say a home equity installment loan might fit or suit you a little bit better just because that installment loan, you already know what your payments are going to be. There are no surprises. But these are just some things that are kind of up to you and what you really decide you want to do. Now, I know that was a lot of information in a very short time. As always, guys, use the pause, rewind, and fast forward features of YouTube to really take advantage of some of the questions you might have. Also, in addition, please, guys, leave any questions you have in the comments below. As always, I'm going to be glad to answer those questions, and I look forward to hearing any questions you guys may have in regards to this. And if you guys have anything specifically that you want to know about, please let me know in the comments below, and I can continue to make videos geared towards those items. As always, thank you so much for watching this episode of The Evan Phillips Show. You guys have a great rest of your day.